there's an abnormal widening of airways that occurs because a patient has continual bouts of infection and inflammation. And a consequence of that is that mucus builds up in the patient's lungs, and then they have a hard time breathing. This disease state is misdiagnosed, it's underdiagnosed, and our technology of high-frequency chest wall oscillation is underprescribed. And so it's really, we feel like we've got great tailwinds of opportunity. To that end, there's a lot to unpack on this slide, but the short story here is that today there's about 824,000 patients who have been actually diagnosed with this disease state. Of that 124,000 patients, 127,000 of them are on our technology or one of our competitors. The remaining 700,000 patients, 230,000 of those are being treated by a pulmonologist. And so when you look at where our direct sales team calls, they call on pulmonologists who then prescribe the technology. If you were to take the 230,000 patients who are being seen by a pulmonologist who have this disease state, our average sale price for our technology is $10,000. So the revenue opportunity is $2.3 billion. So great revenue opportunity in this market. Additionally, if you look at the underside of that iceberg, there's 4.1 million patients that are out there today that have this disease that have not been diagnosed. So we feel like there's great opportunity for us to expand the market and to get more people on our technology. So how is bronchiectasis treated? If you've got this disease state, really what the patient is going through is a vicious cycle of infection, which is then treated by antibiotics. They also have inflammation, as I mentioned before, which are treated by anti-inflammatories. And in fact, next year there's going to be some exciting new anti-inflammatories that are hitting the market. And the consequence of this is that pharma is now getting into the space to treat this disease state. And so there's a great deal of education and awareness that pharma is bringing to the market. That being said, this is an irreversible chronic condition. So once you have it, you can treat the patient for their the underlying infection that they have. The infection, the inflammation, any drug that's out there is just going to help retard whatever inflammation is there. It's not going to fix it. And so you still need to have airway clearance. And so we feel like any other drugs that enter the market are adjunct therapies to what we currently do today. So what is our technology? We've got kind of a cartoon here on the left, but basically, you know, our product is a patient wears a vest that's attached to a hose that's then attached to a generator. That generator creates pulsations and releases the vest that the patient is wearing. And what that does is that then forces the mucus into large airways that the patient has so that they can cough it up or swallow it. And because this is an irreversible chronic condition, we don't cure the patient, but what we do is we improve their quality of life. So you can imagine if you have a lot of mucus which builds up in your lungs, you can't breathe, you almost feel like you're drowning. Think about pneumonia. And the beauty of this device is it allows people to walk, go see their families, go out to dinner, go to a movie. And because this is chronic and irreversible, the patient wears our technology twice a day in 30-minute increments. And that then clears their lungs, and then they can go about their daily activity. This is probably a clearer picture of what our technology is. One of the things that we're really excited about is the fact that we have some of the newest technology on the market. We really feel like our technology is best in class. As you can see, the generator itself is something that might have been, from an industrial design standpoint, come out of Apple. It's very good looking. It's very intuitive to use. Most of our patients are over 65 years of age. There's no on-off buttons. It's a touch screen. And that's really important because you want to make sure that you have patient compliance. Our vests are lightweight, which is also important because most of our patients are not only over 65, but they're female, and many of them are fragile. And so you want to have something that's comfortable for them to wear so that they're compliant. And it's used in the home. And so when you think about this, you want to have something that looks good as you have people come over because it's going to be sitting out most of the time. The other thing that we do, which is unique to Electromed, is that we not only supply the technology, we generate the opportunity for patients to get on this technology. but we also deliver it to the patient's home. And when we do that and we set the patient up on our technology, we do an assessment on what their current state is. We document that through smart notes. And then 5 days later, we go back and we interface with that patient to find out how they're progressing. We document the notes for that as well. And then we go back to that patient 30 days after that, and then document the patient's progress again. It's important because we provide those notes to the patient's provider so that they can see when they've given a prescription for this technology, what kind of an impact that's actually had on the patient's life. And they can see that, yeah, they're progressing or not progressing. And it's really important to be able to follow that patient's journey of how they're progressing. We do have clinical evidence for our technology as well. As you can see, 95% of patients would recommend SmartVest to others. And as you can imagine, if you've got this disease state, there's a community of people that these folks are interacting with on social media, so that helps us. We would say that 97% of the patients who are on this technology are feeling better as well, because again, this is a quality of life technology. From a payer standpoint, one of the things that is really exciting is that when you're on this technology, we have seen that there's a 50% reduction in antibiotic use. So the payer is not spending money on drugs to treat this patient. There's a 59% decrease in hospitalization. And as you can imagine, if you have this, many of these patients do get hospitalized if they have bronchiectasis. But if you can keep them out of the hospital, that's a benefit not only for the payer, because they're not having to pay for that patient's stay, but it's also a benefit for the hospital that then doesn't have a never event where patient gets treated in the hospital and then gets readmitted. So we help prevent that. The other thing which is exciting is, we want the patients at home. And when they get on this technology, they don't have their exacerbations. And so there's a 75% reduction in emergency department visits. We have a unique model. We're a manufacturer, and most people in the home space, if you're familiar with this part of healthcare, is what's unique about Electromed is not only are we a manufacturer, but most manufacturers in this space, they don't deal directly with the patient. They will typically sell their product through a durable medical equipment distributor, and then that distributor generates the demand for the product. They deliver the product to the patient's home. They're also the ones with the payer contracts. In the case of Electromed, what's unique about us is we have a direct-to-patient distribution model. So we're not only a manufacturer, but we have all the capabilities of a durable medical equipment distributor. So when we get a prescription, we're the ones with the payer contracts. We're the ones working with the clinics and helping make sure that those patients actually will get reimbursed for the technology. We deliver the product to the patient's home. And as I mentioned, we do the training for the patient as well. The upshot of all of that is that we're not sharing our margin with the distributor. And so we have very healthy gross profit margins in the mid-70s. And again, as I mentioned at the onset, we're not only growing, we're profitable, we're generating cash, and we have no debt. This is the revenue breakdown by setting. So as you can see, most of our revenue, about 94% of it is in the home. We have a nascent piece of our business really in the hospital. We feel like that's a new frontier for us. Many of the hospitals buy this technology, so the sales cycle is a lot longer than when we're selling into the clinic area. But what's beneficial about that for us is that if a patient gets admitted into the hospital, they need this technology. Because this is a chronic, irreversible condition, once they get discharged, they're going to need the technology. So if they had a good experience in the hospital and we're the technology that they're using, our expectation is that they would then use that in the home. And again, that's a pretty nascent and new frontier for us at Electromed. We had about 25% growth last year in our hospital business. Home care by payer type, as you can see, about half of it is through Medicare. The other half is with private payers. And Brad and I have been talking to potential investors all morning. And one of the questions is, what's going on with reimbursement? And the good news is for our technology, what we have seen year over year is that Medicare increases their rate for our reimbursement by about 2 to 3%. And it's usually based on the urban CPI. So we're expecting that chalk line to be snapped here in December, and we'll see what the rate increase is going to be for next year. And then what the private payers do is they basically draft off what the Medicare reimbursement rate is, and they use that as kind of a touchstone. And then, as I mentioned before, I keep talking about bronchiectasis, and the reason being is because most of the patients that we put on this technology have that condition. That's not to say that there aren't other conditions, usually neuromuscular, that this technology can benefit from, and also has reimbursement both for Medicare and Medicaid, things like cystic fibrosis, and in some instances, COPD. So what's our growth strategy? One of the things that's been our claim to fame, we are a direct patient model, so we're going to continue to expand our sales team. We have a direct-to-consumer channel as well, which has been very productive for us. So we do Google ads, et cetera, where patients get exposed to our technology. We have respiratory therapists that are on staff. So if a patient says, look, I've got this condition, your technology looks interesting, tell me more. We have a respiratory therapist that they can actually speak to that can then refer them to a pulmonologist to see if this is the technology that's right for them. As I mentioned before, we have some pharmaceutical companies that are getting into this disease state as well. And so there's been a big push for market development. If you can imagine, if you're a pulmonologist and you're seeing 50 patients per day, most of the patients that you're seeing, you think have COPD or they have asthma. And many times they're not thinking about bronchiectasis. By more people creating awareness, what we're starting to find is that there's more and more patients that are now being prescribed this technology. So we think that there's a really big catalyst to get more people on this technology. We feel like we have the best-in-class customer care. One of the questions I get asked a lot of times is, why does somebody buy from you versus one of your competitors? We feel like this is still predominantly a clinical sale, so education that we need to do to the physician and their staff, but it's also making sure that we're providing the tools and equipment for the staff to really help the patients get this technology with the right documentation so that patient actually gets reimbursed for this technology so we can deliver it to them. And then also we have, one of the things that we're doing from a leverage standpoint is we have e-prescribing capabilities so that when the clinic is actually giving us a prescription, they do it through an e-prescribing portal, and that provides them really with a checklist of what they need to deliver so that this patient actually gets the technology, physician notes, etc. So what are our long-term objectives? We're a publicly traded company, but we don't give guidance, but my expectation is that we'll continue to have double-digit top-line growth. And I think one of the things that's been exciting in the market, and I think why we've been rewarded, is we're getting continued operating margin improvement on the bottom line. And I expect that to continue in the foreseeable future. So why invest in the company? Just to beat the drum on this, we're in a large expanding market. We have clinically proven technology. We've got broad payer coverage. About 85% of all covered lives in the United States we have contracting for. We have consistent growth over time, and we're becoming more and more profitable. And as I mentioned, we have a very, I think, beneficial gross profit margin in this space. We're generating cash, and we have no debt. One of the other things I wanted to share with everybody is that this is kind of unusual. When I came on board about 18 months ago, one of the things I think really set us apart in a lot of ways is that my incentive compensation, a big portion of it, is based on increasing shareholder return. And so when people go, was the management team really aligned with the investment base? The short answer is yes, we are. So I don't get a big portion of my incentive compensation unless we have a improvement in our stock price, as it should be. Additionally, one of the changes that I made with our management team is when I came on board, in a lot of companies, you've got financial objectives for bonuses, and then you have some more subjective measurements. And today, all of the management team basically is getting rewarded if we improve our revenue and we improve our earnings before tax. And we feel like that aligns with our shareholders as well. The other thing that I think is a big catalyst for our success is that we've changed our incentive compensation plan for our sales reps so that they're really rewarded based on the productivity that they deliver, as well as in our reimbursement team so that they can help our clinics get their approvals done faster versus later. And that's really, you know, the path from getting an order to cash, and I think that has helped us as well. So it's a very attractive valuation, as you can see, when you take a look at a couple of different metrics, Electromed versus the Russell MedTech index. As you can see, our sales growth is significantly higher than them. Our enterprise value over revenue is at a lower rate, believe it or not. Our gross profit margin is, as I mentioned before, in the mid-70s versus 53%, and our operating margin is at mid-teens. So pretty nice story. With that, I think we're done in about 15 minutes. Is there any questions? Yes?
Yes, what IP do you have?
You know, it's really on the technology itself. Predominantly, you know, one of the things that differentiates us from our competition is we have a single hose design.
So it's utility patents?
Yeah.
And how large is your portfolio?
It's not, I mean, we're a single product company, so, you know, there's some patents relative to the mechanism of action of how we actually deliver the high frequency chest wall oscillation, the hose itself, and our bladder design.
And how large is your team, number of staff?
There's about 177 folks that are on the team. Yeah, you're welcome.
Jim?
Yes.
You put up some, early in the presentation, you mentioned the reduction in mucus in the lungs.
Yes.
And then reduction in antibiotic use. That would imply that the mucus is getting infected and these people are hospitalized with infections. Is that correct?
No, I think the way you got to look at it is when you're actually doing airway clearance, you're getting the mucus out of the lungs. There's less chance for that infection to occur in the first place. Okay. So you then have a reduction in the antibiotic use.
Okay.
Yeah.
And what kind of infections do these people typically get?
Oh, you know, a whole variety of different.
Normal respiratory.
You got it.
Okay. Yeah. And in that same group of slides, you mentioned reduction in hospitalizations and emergency room use. So that to me would suggest that there's a cost savings.
Oh, there is, absolutely.
Has that ever been quantified?
There has been. We do that. In fact, I didn't put a slide in here because I just, you know, in the spirit of time and energy. But that's one of the reasons to believe. If you're a payer and you're going, why am I reimbursing for this technology? That's one of the reasons, because we can quantify for them, you know, if you have one of your patients that's on this technology, what is the cost savings? What's the return on investment of investing $10,000 in the reduction in ER visits, hospitalizations? I think the other thing that's unique about us is that we do have 3 other competitors, but we're the only one with a lifetime warranty in our technology. So when you think about the reimbursement schedule, it is usually from 10 to 13 months, where we're actually getting paid by either Medicare or a private payer. At the end of that duration of time, the patient then owns the technology. And if there's anything that goes wrong with our technology, or if they grow out of their vest, we'll replace that free of charge for them. We don't go back to the payer, and the patient can then work directly with us. And so we feel like that lifetime warranty is also one of the things that's very unique to Electromed.
Yeah.
Yeah.
Unique to the industry.
That as well, yeah. Yes?
We were actually the largest owners of this company back in 2018 when Kathleen was running.
Yeah.
Got out because she was struggling on the salespeople and how to affect the internal sales force and get returns on it.
Yeah.
What did you guys do since you came in? I mean, candidly, the EBITDA was stuck around 4 or 5 million forever.
Yeah, right.
And you mentioned operating leverage, which was not existing at the time.
Yeah.
So what did you do on the sales side to improve returns there? And what have you done to squeeze the grape and get some operating leverage?
Well, on the sales side, you know, my background, unlike Kathleen's, and she ran the company for 10 years and did a really good job. I think a lot of the focal point during her tenure was to grow the top line kind of at all costs. And I feel like you can do both. You can grow the top line and you can improve the profitability. And that's what I'm used to doing in running businesses. With our sales team, there's a couple of things that we did. It's the profile of the reps that we've hired. So one of the things that I had us look at is, okay, what do our top performers, what does their profile look like? what's their educational background, if they've had experience prior to coming to Electromed, what has that been? Have they won awards, and what's their tenure been? Because it's real easy to be a one-hit wonder for a year, 18 months. I want to see somebody who's got a track record of success. And so we've taken a look at that, and to the extent that we can, we hire to that. So we look at somebody's resume, if they won awards, or it's the top 10 of their, sales class.
But that's not a cheap hire either.
Pardon?
That's not a cheap hire if you're getting that resume.
It's interesting. It depends where you actually recruit from. I mean, a lot of the people that were, what's their experience been? If they've had DME experience, it really helps because we are not only a manufacturer, but if you come from DME, you understand the whole payer situation. Somebody has been used to having kind of a route job because this is a show-up business. That helps. So anyhow, I could keep going, but the profile of the rep, the training that we're putting them through. My expectation is if somebody comes to Electromed with sales experience, they know how to sell, especially if they've been experienced doing it. And I want them out there having all the tools and equipment that they need at the onset, not 4 months from now, so that they can become productive sooner. And one of the things that you've seen, if you've been continuing to listen to our story, is we're not only increasing the amount of reps that we have, but we're also getting better productivity out of our reps right now. And so when you have that, obviously our most expensive asset is our sales team. If you can get more productivity out of that, that's just going to help, those dollars fall to the bottom line. I think the other thing, back to squeezing the grape, to use your nomenclature, is with our reimbursement team. Back in the day when we would hire a salesperson, as you're probably aware, we had to hire almost a one-for-one person on the reimbursement side. We don't have to do that any longer. Our reimbursement team has become a lot more productive. We've changed their compensation plan as well, so that they're compensated based on approvals, not on, a nebulous end-of-year bonus structure. We pay them quarterly. And so they have kind of now more of a sales rep mindset than they did 18 months ago. Those are just a couple of examples.
And this business seems to be growing pretty much every quarter, year over year.
Yeah.
Is that the way you look at it at this point? Is this steady enough and solid enough that you said 10%, who cares if it's 5% or 15, but whatever it is it looking like year over year should be pretty steady?
Well, I think the way I'm looking at it is, I can't predict what we're going to do every quarter because there can be ebbs and flows, but I'm looking at the end, when the dust settles at the end of the year, we're going to have top line growth of double digits.
And do you expect operating margins should keep growing?
I do, yeah. We're getting scale, we're continuing, we're going from strength to strength, not only in our sales team, our marketing team, what we're doing in reimbursement, which I just mentioned. We brought in some new talent in operations. When you were following us, one of the, especially during the pandemic, one of the challenges that the company was having was with service levels, and that's so far in the rearview mirror. I mean, when somebody orders a product from us today, we have no stockouts. We have 100% service levels. Our first pass yield is over 98%. For those of you who aren't familiar with that, that's when you're basically manufacturing a product at the end of that manufacturing cycle. Whoa! How many of those have you rejected? And the reality is it's like 2% of total, so it's very small. And so we've really improved on all facets of the business.
You guys were buying your stock at 17. Are you still buying it here at 30? You still have a plan in place?
We basically did a stock repurchase plan this past quarter in Q1, and we purchased about 4.5 of the $5 million reauthorization that we had. So we've still got a little bit of a tail on that.
Thank you.
Good questions. Thank you.
Thank you.
Yes. Anything else? Thanks, everyone. Appreciate it.
With more than 6,000 small and micro cap companies listed, if you're looking for the next Apple, then ChannelCheck truly is your trade. It's an investor community where you can access independent Wall Street research, advanced market data, balanced news, corporate videos, and podcasts. You can even register to attend in-person Meet the Management Series luncheons and to be part of the preeminent annual Small and Microcap Investor Conference, NobleCon. And here's the best news. Since ChannelCheck is sponsored by the featured companies, premium membership requires no investment. It's absolutely free. So check it out. Log in today. Find out why Channel Check is North America's leading source of research on the companies that just may change the world.